The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have Bill Cerubi, Cycles Research, Vienna, Austria, New York City, will be our guest at 9:30. It was always good information. We'll start out today by looking at the German DAX and also the FTSE. Those we watch those all the time just to get a flavor for what's going on over in the UK and also in Germany. And you'll notice here that both of these have been selling off a little bit, but the rally that we've had here in the last 30, 40 minutes in the S&P is any indication we're probably going to be going higher. I did post the AI artificial intelligence forecast for today about an hour or so ago, and it's forecasted a rally, and it should end around 10 o'clock. So we'll see if it works. Who knows? We've got a bunch of questions today, folks, so let's cover those because we've got to have room for Bill at the half hour. The first question that we had is about the natural gas, and let's just get this up here. We'll be able to bring it right here. We said wait for the first ABCD correction. You're seeing it. We made a 50% correction here down here at 165. Now, if it's really bullish, folks, it's not going to get any lower than that. And if we start breaking below 160, we can still look at that price level of 146 that we're looking at. That was nothing more than a 27-point handle rally, possibly in a bear market. So the key here is to watch it at this 165 level in the natural gas, because if that fails, that would suggest that we're probably getting ready to go down even a little bit more. That's why it's very difficult to chase markets, at least from my point of view. I've always said it's better to write your checks directly to the Chicago Mercantile Exchange so you can bypass any slippage in commission. So if you want to chase markets, I've never had any luck doing that. And speaking of chasing markets, we did have a very bullish grain report yesterday, as most of you probably already know. We've had a big move in corn, wheat, and also in beans. This is the first tip of the hat for those guys. So we'll be watching those markets for retracements in ABCD, and we'll be keeping a close eye on them. Another question that we had overnight was about the crude oil, and we've been following this one because we trade it quite a bit. I sent this out in the videos and for the 24/7 folks last night when we got up there at that 40.55 level. That was a 78% retracement. You can see the ABCD patterns there, and inside between the 30th and today, you'll see another ABCD pattern. We dropped 1.5 handles down to 39.05. Now we're rallying back to about 39.80. So any move above that high now, if you're in that, it's already made $1,500 at the strongest point. So you certainly don't want to lose anything in that. So that's the main thing is it's how much you lose, not how much you're going to make. So make sure you put your stop at probably as close to break even as you probably can, because it could go shooting up and make even a higher high. We're trading around 39.75 right now. The level that you have to be concerned about is 40.35. If you get above 40.35, you're most probably wrong. So if you happen to be in that trade, I'd put a stop at 40.35 and let it see how it goes, because it has potential to have a pretty good move to the downside. And the reasoning for that is this rally that we've had in crude oil that started way back when oil hit $6. You remember back in late May, that was a open interest has not gone up. I mean, this open interest has been dropping, so there's not been new players coming into this market. It's only been short covering. That sets up a potential for something really quite negative. Got a question, how can the market rally 30 points like it just did in the S&P? Folks, this thing can do anything it wants. Remember, it has the Federal Reserve backing it, plus you have the shorts are absolutely scared to death because the longs have been absolutely right since March 23rd. And so that's the reasoning for it. It's just the psychology behind it. You don't have any other way to look at it other than that. Keep it as simple as possible. Folks, one of the things that you have to do is, if you're a technical trader like I am, you've got to forget about watching the news, because the news will just absolutely draw you nuts. Watch what the price of the bar charts are doing. And the other thing that you can do to really help your trading is don't watch the darn machine all the time. Put your trade on, and if you're watching crude oil, go watch the S&P or something else, so keep your mind off of it. One of the worst things that these things have for you today is when you have your program there, it tells you what your equity is to the penny, to the second. Back in the days when I was trading, heck, we didn't know what our equity was till the next day. And these swings that we see, we weren't aware of the big dollar swings that you see going on right now. So that's that's very, very important, because when you're looking at that monitor, you're basically looking at a mirror, and that mirror will reflect all of the things that are going on in your life. Whether you kicked your dog, kissed your wife, whatever it happens to be, it's going to be, reflected in that. If you've got problems with your kids or with coronavirus or, making bills, making the payments and stuff like that, that's all reflected in that. And that's why it's real difficult to just trade what you see, not what you think. That's my motto, and I try to think about it. Don't always do it myself, but I think about it a lot anyway. So keep that in mind. Very, very important to remember to do that. Okay, now we had another question, and that was about the Treasury bonds. I still believe that Treasury bonds are not going to go to zero interest rates. I hold on one second, folks. We've got to get this up here. Almost made a big mistake here. Get this up here. Here are the Treasury bonds. You see we had a little 7-day rally in here that almost got to the 78% level. We got down to 77.28. We hit 179. Hasn't really done very much. The rally's been from 171 and change to 170 and change up to 178, and we should start down again right about now. That's what it looks like, from the cheap seats here. So we'll pay very, very close attention to that. I'm going to be doing a webinar for Reuters for the Middle East and for Asia sometime in the next few weeks. I'll let you know if we can get you in to see that. It's not going to be, it's going to be a half hour. It's not going to be too much, but they're interested in pattern recognition. So I wanted to alert you to the fact that if we do that, I will let you know if we can have access to it. You'll be able to see it. One of the things that I have a very dear friend that happens to be a student and does a lot of work with Reuters. He's actually on their staff, and he asked me to, talk about some of the things that we look at with pattern recognition, particularly how it refers to the foreign exchange markets. And we're going to be talking about the euro and some of the things that are there that really are interesting, because the euro, folks, I wish we could, I don't have time. Well, maybe at the break I'll have time here. I'll show you what we're watching. But I wanted to give you a quick heads up here with the gold market, folks. We'll be right back. 877-927-6648.
If you're not currently using the Tas Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Tas Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Tas understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Tas Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Tas Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to mention one other thing, and that is that we're going to have Bill Meridian as our guest here in about 12 minutes, and he's always had some wonderful things for us. Let's take a quick look here at the gold market because I'm watching it very closely here. We're now down $20 from our high that we made last night, and we're coming into some pretty good support. Whether it works or not, who knows, but nobody else does either. Let's take a quick look at that euro. This is what I wanted to show you. Then we'll get to the gold market. But this is something that I think you might have an interest in if I can just find. Here we go. Here is the euro over the last 10 or 12 days. This is basically an hourly chart. And we've been following this since the 11th of June. And basically what I've done for Reuters is they wanted to know a little bit about pattern recognition, and I posted them a chart just pretty much similar to this, and I showed them that there were about 10 beautiful tradable patterns here that in fact, these times they actually worked on all of them, but it was basically, looking at the ABCD patterns and throwing in a little bit of Fibonacci and, looking at the patterns of how these things go up and down. And so I'm going to be discussing that in a short webinar for them, which will go to the Middle East and also to parts of Asia. So we'll let you know what happens as we come up with that. Now, here is a real interesting thing to look at. Let's take a look at this gold, folks, because this is where we were just talking about the $20 break in the gold market. Get this up here. You'll see we're down now. Folks, we just made a 61% retracement of the low we made yesterday that came in at 1775, which was a perfect 382 retracement. That was basically a 382 retracement in a two-day down move in a very strong market that was extremely bullish, and that's why we brought it to your attention. And now we're trading at 17. It can't go below 1784, folks. If it does, something's seriously wrong with this. So pay attention to 1784 in the gold, because if it breaks that's broke the sequence of holding the numbers on the way up, and that's why you try to see which way it's headed. And once we got above 1800, it was certainly bullish, but we only got to 1808 and then we backed off. So if it was really good, it would have expanded much higher into that 1835, 1840 level. That's still possibly there. But we must pay very, very close attention if you're trading gold, because remember, this thing is trading for roughly $1,800. So each contract is worth $180,000. That makes it the big daddy rabbit on the block, folks, because you get a lot of leverage on that for that particular move. So just keep that in mind. Now, I have one other question I wanted to bring to your attention, and that is with the silver. Silver has been acting a lot different than gold, and if you'll take a look at the daily silver chart, you're going to be able to see that it's made the ABCD pattern. It almost made the double top. It missed it by about 3 cents, and we got to 1888 last night, and we're trading quite a bit below that right now. So that could have completed that ABCD pattern right there, and that's also market information that you use as a technician to see if maybe this is a double top. We don't know, but nobody else does either. You pay your money and you take your choice. So those are just a few of the things that we're watching. By the way, if you have any questions, it's 877-927-6648. Now, let's talk about the grain markets just a little bit. The markets had the report come out. Rich Anderson was on before the report yesterday and said that, there's probably going to be some big surprises in this market, and by golly, surprises it did. Let's take a quick look at the corn, which will probably be the easiest one to see because they all were big, but the corn probably was maybe the larger surprise of the whole group here. And you'll notice that we went down, we got as low as 322. We've rallied 30 cents. Let's get this up here so you folks can see it. We've rallied 30 cents a bushel, which that's pretty much a seasonal rally, but we got all the way up to 354. We're now trading at 350. Now, we've gone from 321 to 354, so we rallied $1,500. We'd have liked to have been a buyer down there at 320. We didn't quite get there. We got to 322. And what we'll be watching now is to see what happens as the market digests this information that we've had on the soybeans, the wheat, the corn. All of them were very, very bullish. We'll do another one just to let you know. You can see these yourself because you follow them as much as I do. But you can see here on the soybeans, we had a really nice move here in beans. We'll get this up here so you'll be able to see it. It's been more bullish than anything else because it didn't back off very much, but it's still headed higher. Let's just get this here so we can put these numbers in. You'll be able to see it a little bit better. And we'll see the retracement that we had here. The real key to this one is the fact that on the soybeans, on the down move, when we're making new lows and everything else, the nearby soybeans, the July beans, could only make a 382 retracement down there at 857. And it took them 8 days to do that. And then, of course, you're coming into the report, and boom, all the way it takes off. And, it says that the ABCD on this says we're going to go above $9.10 easily. So what we want to be watching now is to watch it every day. And as soon as we get a nice 3-day setup with an ABCD pattern, I think that'll be the time when we'll try the farming. We tried the wheat. If you remember, we were looking at the wheat when it was down at and we're looking at the Christmas wheat at 494, and then it went all the way down to 485. We took a quick nickel loss in that, 5 cents, $250. And then because of the report, I will not go into reports, folks, because these things are so crazy that anything could happen, and it usually does. And these fellows that do this grain stuff, they're the masters of fake news. Believe me, they'll bring one report out, and then in 2 months later, this was revised a little bit. We had a little clerical error, and nobody's held responsible for it. But that's, in fact, what actually does. The only time I was ever going into reports was I was trading on the floor of the Mercantile Exchange, and the fellow that was filling paper for live cattle and it was when the cattle and feed report came out. He had the account for Earl Butts, who was Secretary of Agriculture. And when he was in there buying, you better be buying because that report was going to be bullish. I only saw about 5 or 6 of them, but every one of them was absolutely spot on. Everybody on the floor knew it. I mean, everybody knew what was happening, but of course it wasn't published in the news or anything. So keep in mind that it's not always a fair game sometimes, because the information that you give you is not what it seems. So keep that in mind. I try to stay out of the politics as best I can. I've had for many, many years, so I'm going to be going back to that again, I think. So we'll see. All right, let's make one other question that someone had that is very interesting, and that is, what do you do when these patterns don't actually work the way you think they do? And here's one here. You'll be able to see here. This gentleman. Relatively new to the patterns and stuff, but look at this. I want to show you. This happens to be the gold market. We'll be right back with Bill Cerrubi, folks. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Ten four. Bill, are you there?
Can you hear?
Yes, sir, I can, Bill. I'm having some internet problems here. We're starting the monsoon season here, in the desert, and sometimes we get these electrical storms, and I think we just had one because the internet went out for a minute. It looks like it's back. So I've got you up, and so why don't you take over and tell us what you're looking at, my friend?
Sure. Well, first I start with two announcements. The Foundation of the Study of Cycles has returned. Go to cycles.org. We had our first online conference last week at which I spoke, and also Bill Meridian's astrology columns, formerly in Dell Magazine, which ceased publication, now appear in the Mountain Astrologer beginning in August. So now that we're through those two, we'll go to 2020 forecast. S&P is likely to top in January. The bonds, longer term, look like they'll hit a low in October and rally through Q4. And gold is simply going to move higher. We'll look at each of these. But first, I'm always stressing that if you put too much money into the system, the excess that's not needed for commerce spills over into speculation. And I had a number of these, if you remember, during the past year leading up to the top. And I would just have Bloomberg on here this morning, and they said the market dropped 20% in the last quarter and rallied 20% in this quarter. And they've poured so much liquidity into the system that the signs of excess are back, the speculation. So last week, Sotheby's set a new world record for a pocket watch sold online with a price of $832,000, doubled its pre-sale estimate. For a 1904 Dent Ultra Complication, one of the most sophisticated watches ever made. So now let's go to the next one. Here's two more. Kurt Cobain, you remember him from Nirvana's MTV Unplugged performance. His guitar sold at auction for $6 million. It was a Martin 1959 D18E. The previous record was $3.95 million for a black Stratocaster owned by Pink Floyd's David Gilmour. Remember, this cardigan went for $330,000 in October. And there's a 12-inch reticulated Chinese vase from 1742, rediscovered in the country house of an elderly Dutch lady in a lively home surrounded by countless cats and dogs. It sold at Sotheby's in 1954 for 44 British pounds, has been lost for 50 years. At auction, it's going to go for $9 to $11 million. So if you think there's no money around, I mean, we haven't gone back to the banana taped to the wall for $120,000.
That's my favorite.
Yeah, that's what's happening. Yeah. I'm offering to do it for $60, by the way, if you want one of those. So here we have. I am bullish on the market for July, primarily because we see the weekly cycle on the top. You see the monthly cycle on the bottom, and you see a little double low in price, the heavy black line. So this is bullish as far as cycles go. And now we're going to step into the wonderful world of astrology here on the next slide. Let's see, on the next slide.
This is the Jupiter-Pluto aspect?
Jupiter-Pluto were 0 degrees apart, which is a conjunction on the 30th, which was yesterday. And there you see the average effect from...
Wow.
That's from... Let's see, that happens about, I didn't put it on here, but about every 13 years. So this is over 100 years worth of data. There have been 10, and this is the average. None of them have been down. So... Wow. When I started doing this before I wrote my recent report, I said I might as well stop here. I said the first two graphs are from spectral analysis. They extract from the data all of the most active cycles that are current right now. They do not include this. This is something that I noticed it was occurring, so I said, as I recall, it's bullish. But it's 10 out of 10, so there have been no failures. So if it does fail, this will be the first time. And look at the left scale. The average rise has been 5% in 30 days.
Wow.
So from the cycles world and from the astro world, it looks pretty bullish. But, of course, what we do is we try to confirm this by looking at the technical measures, and they are on the next cycle confirmations. And as I always like to say, excess liquidity and bearish sentiment equal higher prices. And I always joke that just take your wife, give her a couple $1,000s in cash, drop her off at the shopping center, and come back a couple hours later, and you'll see this dynamic in action. The bull ratio of newsletter writers in the Institutional Investor Survey has moved above 75% for the first time in months. Returning optimism is a good sign for stocks. It just can't get, as we know, it can't get very extreme. Otherwise, that's too much bullishness. And of course, the Association of Individual Investors every Thursday releases their poll. Now, it has not shown any increase from its low level, which is 23%. Now, before the high, I mean, that ratio is up in 40%, 50%. And I said it had to go to the low 20s before we saw any sort of a rally. But for over 4 months, there have been more bears than bulls. Despite the rally, over the last several weeks, it stayed at 22, 23%. So that means that the less sophisticated investors don't buy this rally, and they are usually incorrect. So you read it in a contrary way. But of course, there are different types of sentiment indicators. This is based on my opinion or yours. Like if I saw Larry, are you bullish or bearish? There's no risk in saying I'm bullish or bearish. You're just giving an opinion. You're not risking any money. And as I said, these first two indicators are based upon opinion. But those that are based on actual trading, actual money, the people must have a greater conviction because they're putting down their cash. So if we look at the next one, there's the smart money in the I forgot the name of the survey. They're holding over $40 billion in equity futures. That's bullish, and usually as the market rallies, if you're familiar with these numbers, that goes down. It's not going down. It's holding steady. So in other words, they're bullish. They got bullish at the low, and they're still bullish. They're holding on to their long S&P futures positions. So I conclude that they are bullish longer term, and that's the smart money, not the dumb money, and they are bullish. They are holding. Now, institutional investors who move a little more slowly, of course, they're not trading futures, they're managing portfolios, are pulling money out of cash and are placing some of the funds into stocks. This is a Bank of America poll of large money managers, their net overweight equities for this first time in months. And I think if you remember 1 month ago, I presented the real estate cycle, and I showed it's in its accelerating phase. Well, the guy just before, I will pick it up after the commercial.
You bet. We'll be right back with Bill Meridian, folks. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has just launched their July 4th Tiger Dollar sale. For 1 week only, we've doubled all the bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good on all TFNN newsletters, webinars, and trading services and never expire. For all the details and to get your Tiger Dollars before this sale ends Monday, July 6th, visit the front page of TFNN.com today.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Bill Meridian, Cycles Research. Bill, I think we're on the Economist cover. Is that correct?
Well, I just was pointing out that the professionals are overweight stocks, and now I consider this to be a contrary opinion buy signal. I had one of these a month ago before the market rallied. There was a similar one.
Yep.
There you go. That's another one. Contrary opinion covers of magazines pioneered by my late friend and archist friend, Paul McRae Montgomery. So let's go to the next page.
Okay.
Here's the S&P Daily. Now, I didn't draw the line in, but if you draw a downtrending line connecting through those two prior tops, it's just breaking through that as we're speaking to the upside. So you've got a little – now if you look back to the left, you look at April, you look at the low in May, you look at the low in June, you've got a series and you just put in a higher low. So the market's going to new highs, I think. So that's the current state of the market. And let's go to the monthly. Now, the monthly, the interesting thing is look at the momentum, which is called departure analysis, down at the bottom. It is at the zero line. So look back, 2009, you have a low. Then you have higher lows here, 2012, 2015, 2019, and it's probably going to hook and turn up, putting in a series of higher lows going back to 2009, confirming my opinion that this is still an ongoing bull market that started in 2009. And the market came down, you can't see it right here, but it came down at ABC. That happens in a bull market. So that is the S&P monthly. Now, next we'll go to the U.S. 10-year note. Now here, you note that both cycles are declining, the weekly and the monthly. Last month, I wrote that I thought bonds, June, the month of June is very bearish for bonds, as is March and September. And I forget how it closed yesterday, but it was at a very fractional loss. So I think you could say it was unchanged in June. You may get the same thing here. There's just so much money floating around that has to go somewhere. But I doubt you're going to make any money in bonds. And I doubt very much they'll take out their prior high at 139.5. They're swimming upstream, and seasonally, this is not a strong time of the year. It's moderately bullish, so you've got the two dynamic cycles pointing down, the seasonal cycle pointing up slightly. So the result is probably going to be a trading range. So much more interesting is gold. Now, gold, that is the annual. It is the odds, the probability the market will rise multiplied by the amount it rises or falls. So it's the expected return. So you'll see that January is very strong, February a little less strong. So you see that the peak is around January. But note that June through September, that's exactly where we are. So seasonally, there's nothing not to like here. The market is up 60% of the time in August, 61% in September. But the return in September is the highest of all the months. So if you multiply 0.61 times the average return, that's the strongest month. And you see that the payoff, the money changing hands there up at the top. So now that we looked at the static cycle, let's go down one more and look at the monthly cycle. And you'll note, or the weekly and monthly, the weekly has already bottomed. It peaks at the end of the month. And the monthly cycle does likewise. So for the month of July, there's it's all the lights are green for gold. And so where might it go? And of course we have, if you like triangles, you have our favorite formation, the ascending triangle, which is where you have the higher lows, and then you have the flat top, and then you break through it. And so if you take that and you project it up, this says 1800. No, I didn't change the it's 1800, 1850, breaking out from that little rectangular position it broke out from April through June. I should have changed the headline, because the way you do this is it started at 1450, it goes to 1750. So you take that difference, 300, and add it to 1750, and you get 20. That should read 2050. My apologies for that. So I'm looking for 2050 on gold. I would not be surprised if we're there by the end of the month, but certainly by September.
Wow. Okay. So that figure should be 1800 to 2050.
I would say 1850 to 2050.
Okay, great. That's what I wanted to know. Thank you. By the way, I wanted to thank you for that, too, because you were on last month and saying that the June was to be slightly down, and it's exactly what happened. So it was very good to you to share that with us.
Yeah, it was. That's what the cycles indicated. And June is usually a blah month. If you look at the histogram I just had up, you'll notice that the gold hardly moves in June. It usually bases in the month of June and gets ready to take off over the summer.
Wow.
And I threw in here again, I threw the 18-year real estate cycle, and maybe I think I wanted to emphasize it, and perhaps some listeners did not hear the last show, but that's the 18-year real estate cycle. This is from the book, The Secret Life of Banking and Real Estate by my friend in London, Phil Anderson. And Anderson picked this up from an obscure book that I cannot obtain. It's out of print, so I'm glad Phil has rescued it. But it says that it points out that, and he traces the history of this in the book, that for 7 years, real estate recovers from a bad patch, and prices rise very gradually. After 7 years, people realize that real estate hasn't made a new low, so they start to pile in. And it goes into its accelerating phase. So now we're at 7 and 7 is 14 years. Then it gets to be outrageous. And this is what happened in 07, 08. So Phil and I both agree that the real estate market probably bottomed in other words, we were at the end of that 4 with the little arrow, 2010, 2011. So 2016 or 17 started the accelerating phase, which is where we are now. And the high will be 2022, 2023. And the reason that I'm bringing this up is, as the guy just said, he said some of the money is going to go out of paper assets because bonds are not showing the great return stocks are. Stocks gave everyone a big shock, and people want more real assets in their portfolio. So right now, if you want to sell something, I would wait till 2022, 2023, probably 2022. I wouldn't get too close to the edge there. And then we're going to have another period down, but these period crises move and follow the rule of alternation. If the last crash was really bad, the next one won't be. So if you're a longer-term holder, you may just want to hold. But right now, I think everyone should be pleased to know the place I'm sitting here in New Jersey I bought it in 2012. So I bought it back right at the low in the cycle. It is now, one of these just went for 3.5 times what I paid for this place.
Wow.
So that's how you can use this profitably. So if I'm looking to buy, somewhere at around 20, 23, 4, or 5, somewhere in there. But that's just a natural result. Money has got to go somewhere. And I keep making this point over and over again that, got to go to commercial.
Hey, come back with us just a few minutes, Bill. We'll be right back. 877-927-6648.
Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Bill Meridian, Cycles Research. Bill, do you want to tell the folks how what you have available and how they can reach you? By the way, Bill, thanks for joining us today. We really enjoy hearing what you have to say because you're so spot on most of the time that it's really great. So thank you for being with us. Go right ahead, my friend.
Yeah. How come it's not all the time? That's why I can't. Why can't we get it right?
Hey, you're welcome. Would you like to come on daily? I'll be happy to have you on daily.
Well, you can. My website is billmeridian.com. My email is bill@cyclesresearch.com. I put out a monthly letter for individuals, a weekly report for institutions, and the latest book is Mastering Geopolitical Predictions, Applied Mundane Astrology. And they also have the older books, Mastering Geopolitical Prediction, The Predictive Power of Eclipse Paths, and Planetary Economic Forecasting. And I have my YouTube channels, which I have to update them, Planetary Stock Trading and Mastering Geopolitical Prediction, but I haven't posted anything in a while.
Bill, we have a question from one of our listeners, and that is,
yes.
Do you do consulting? Do you do private consulting for folks?
Yes, I do.
So they just go to your website, make an appointment, and work out that way. Okay. Just
bill@cyclesresearch.com.
Do you still do astrology charts for folks?
I sure do.
Yeah, Bill, do you remember 30 years ago, you and Victoria, my hospital where I was born there in Indiana burned down, and I didn't know the exact time of my birth, and both of you rectified the time. I don't know how you did it, but it came out to the exact time of 11:55, and my aunt said, I don't remember when you were born, but it was just a little before midnight. So that was about as close as I could come. Yeah, I remember that very vividly.
I shall tell Victoria that my teacher, Charles Jane, was a master of rectification, an art that has been lost. And I started laughing because I just spoke at the foundation conference. I had to prepare for that. Then over the weekend on Friday, Saturday, the Astrological Association, I was supposed to be in England. But when they started, it was 5 a.m. here one day. I lectured for 6 hours that day and 6:30 the next day. I'm absolutely exhausted. It's after midnight. The phone rings. It's Abu Dhabi wanting me to do some work. So,
hey, thanks for joining us, my friend, and be safe.
Anytime. Yeah, bye-bye.